If you're new to crypto, you may not know that there are patterns to how crypto goes up in value and goes down in value. If you've already been in the space for a while, you will know about the halvening pattern, how there's a 4-year cycle, but perhaps there are other drivers as well that cause the Bitcoin price to go up, that cause the Bitcoin price to go down. That's what we're going to be talking about in this video.
Take the first step towards online privacy. Get NordVPN.
Got crypto? Got a hardware wallet to keep your crypto safe? Then you have to have one of these to keep your seed phrase safe. The KEYSTONE tablet is fireproof, waterproof. You can use it to store 12-word, 18-word, 15-word, 24-word seed phrases. It comes with a full set of letters and everything you need to make sure that your seed phrase never gets destroyed or disappeared. Get one, get two, get three, have multiple copies. Use my affiliate link in the description below.
Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. And in this video, we're going to be looking at the drivers of the bear markets and the bull markets that we've had ever since Bitcoin launched in 2009. Now, I'm joined by a celebrated author and got an extensive background in cryptocurrencies. And we're going to be talking about his book, Crypto Titans, which is all about the patterns within crypto. Now, before I introduce him, please subscribe, follow me on Twitter, CryptoRichYT. Join my official Telegram announcements channel. And if you're watching this on YouTube, please come over and follow me on Odyssey, bit.ly/CryptoRichOdyssey. Email sign up, completely free. And you get paid. You get paid crypto for watching videos. Plus, you support my work on a censorship-resistant platform. Hey, Markus, thank you so much for making yourself available.
Hey, thanks, Rich. Thanks for having me.
You're so welcome. And that's a virtual background you've got, haven't you? That's not your room,
that's
right?
correct. Yeah.
Okay,
correct,
just check it. It is a really great room if you have a room like that. All right. So, Markus, you're here to talk about your book, Crypto Titans, and I'll link to it. And, people will be able to see the screenshots because I'll overlay bits of it on the video and stuff. Do you want to say a little bit about yourself and then we'll start talking about this book?
Yeah, I'm currently head of research at Matrix Asset Management. It's a digital investment platform, predominantly based in Asia. But we have a long history about, the founders have been, one of the key people within the crypto mining industry. So 10 plus years experience in the industry they have. I myself have been more on the hedge fund side, so I've been an industry insider in terms of like managing tokens, managing assets, managing crypto hedge funds also. So I've spent a lot of time, analyzing the markets, understanding what drives the markets, and really just, put it all together in a book and just made it available for everyone.
Okay. All right. And what, in a nutshell, what is Crypto Titans, the book about? And then we'll dig into it a bit more.
Yeah, Crypto Titans is sort of kind of like a history book about the industry, how everything started, everything evolved, and it basically describes the 4 crypto bull markets that we have seen from 2011, 13, 17, and 21. What were the drivers? What were the players? How do we, get to those levels? And also how policymakers have, reacted very often. And I think also kind of reinforced kind of the bull market, but also kind of crashed the bull market. And that's kind of like these events that we put together and really just, describe in the book.
Okay. All right. So you said 2011, there was a bull market. 2013, yeah. 2017, I know about. 2013, I know about, right? Because that was when I bought crypto I bought my first Bitcoin just before it mooned, a few months before it mooned to $1,000. And then 2017 I know about because that's when I started my channel in April 2017. And then 2021, which was a bit of a feeble bull market relative to 2017 and 2013, right? And then the next one is predicted to be 2025. And they follow the halving. Now, for people who don't know, Bitcoin launched in 2009. A guy or a group called Satoshi Nakamoto released the code. People started running it on their computers, on their CPUs. And every 4 years, the amount of new Bitcoin that get created, and they're created every 10 minutes, halves. So it was 50 Bitcoin every 10 minutes for the first 4 years. And then 2013, it halved to 25. And then 2017, it halved to, 2012, it was the first halving, wasn't it?
Yeah, that was
2012, then 2016, and then 2020, and the next halving will be 2024. And right now, it's 6.25 Bitcoin that are created every 10 minutes. So it creates this artificial scarcity set against rising demand and rising adoption and greater awareness. So you got lower and lower supply, a bit like with gold. You know, the supply of gold gets harder and harder to get as the demand still goes up and people hold on to gold. Okay, now you said there was a bull market in 2011. That was before the halving. What happened in that bull market? Where did the price go start from?
Well, Bitcoin was seen as a new form of payment, right? So we had anything from Silk Road and WikiLeaks were accepting Bitcoin, and this is where it got a little bit kind of the, a bad rap in some of the people's ears. But I think that was kind of like people looked at it as a new payment method, and once we got out of that bull market, we kind of came into the European debt crisis. So it was a lot of driven in Europe. We had the bankruptcies in Cyprus in 2013. Really, and again, I don't want to jump too quickly, but I think these were all kind of big steps, and of course we had a big on ramp in China. Then in China was, I guess, really a mysterious bull market for many, because we had something very similar happening last week where there was a documentary in China in 2013 on CCTV, and last week we had something similar where CCTV also talked briefly about the potential crypto bull market in Hong Kong coming.
Oh wow, okay. And what were the highs and lows of 2011?
I think 2011 we got something near to $40, right? We came from below one. We had, it was also a multiple, right? It was kind of a 4x, 5x, 6x bull market, and it was to 40, and then we came back to kind of 10. We crashed, and then again, I think the 2013 one. Initially, I think in Q1 2013 we got to 230, 300 around about. This is when we had the bail-in crisis in Cyprus, where basically everybody with a bank account in Cyprus needed to make the government whole a little bit, and that's when Bitcoin really had a big spike, and then we came off, and then China took this to 1,000 level, as you said earlier.
Yeah. Okay. So look, where do you want to start? What is it your book communicates?
Yeah, so basically it really helps people understand how the industry evolved, how it developed, who were the kind of some of the players, and some interesting, insights, without really giving away too much from the book, right? But and the book goes through some of these events a little bit quicker and some a little bit more in detail. But one of the things that I really kind of admired, there was this guy in 2012. He programmed by himself, a 17-year-old student, coincidentally here in Singapore, Chinese student. He programmed a crypto exchange within 5 days by himself and set it up, and people started to trade on it. And eventually, this exchange, I guess was a little bit leaked how it was built, and then another exchange was built on top of it. The source code was used for it, and that's when we had actually Bitfinex coming out of this exchange, out of this kind of 17-year-old guy, and it was quite interesting. And then they built, of course, a huge exchange on Bitfinex. But I think there's a lot of those stories. What are the early players, and of course it goes to all the the most recent players, with Sam Bankman-Fried and CZ. But I think when we look at some of these older people, I think they were also quite remarkable, and I think it really helps to understand that this industry has evolved so rapidly, without really jumping too much. But 4 years ago, tethers and stable coins were not really used that much, and of course now they're used every day, and they're the largest component, I would argue, on the daily crypto trading volume. But 4 years ago they were just really starting, and I think we just looked at also the events, what really drove these. But I think going back again, what you said earlier about these CPUs, people were started to mine Bitcoin, but it was also in 2013 when there was actually a huge breakthrough in Bitcoin mining, and especially by some of these Chinese Bitcoin miners. They were able to really level up the game, and suddenly they were selling these machines, and the machines were profitable within 3 days, which was which was really crazy, So there was we were talking about some of these NFTs having margins of 98%, but these things had margins of 400%, because there was so much demand for it. And it was really depending on where the Bitcoin price was and how it moved so crazy. They made really their money back within 3 to 10 days. And the manufacturers of these mining equipment, they set the price conservatively at the 1 month, recoup your investment return. Which is this crazy. And of course, they were like sold out like immediately. And my boss here, I also discovered, of course, I knew he was like, quite well known in the industry and everything, but he invested 1,000 Bitcoins in 2012, and a year later, he made 500x return, and it is, yeah, I mean, these are like enormous numbers, and it's really interesting. I mean, this is like, again, these are like these early events, and the book goes through these events like relatively quickly and everything. But I think it just gives you like a great overview, and I can just like, talk
That's
forever. But if you
incredible.
have any questions, so
There's so much in there that I could dig into, right? So one of the things I'm curious about, I just want to know about this 17-year-old exchange. What was the name of the exchange?
Bitcoinica.
Bitcoinica. Never
Yeah,
heard of that.
but it was actually the first exchange where people could bet against falling prices.
Right.
So
Okay.
you could actually bet because we had like Mt. Gox, and Mt. Gox was you could only buy. But how do you, what do you do if you kind of want to protect yourself a little bit? Because before miners could just, just sell the Bitcoin or whatever, but from a pure speculative exchange. I mean, this was like the first one that really was developed and, and put out there. It was just literally put out there, right? Somebody programmed it, and then people like started to trade on it. And it actually made really like good money for this little kid,
Wow.
but
It got me thinking about how far the industry has traveled, because I bought some Litecoin and Bitcoin of BTCE and also Cryptsy, which are long gone, long gone, along with the crypto that I kept on that exchange, which, by the way, is a reminder: do not keep your crypto on an exchange unless you're going to be trading. You're doing that regularly, but only put in what you're willing to lose, because the exchanges can get hacked or they might be captured by regulations. It's just not safe and secure. Not your keys, not your crypto. Get yourself a good quality hardware wallet. Okay.
Yeah, actually, that's an interesting point, because FTX was not, was maybe the last, but not the first exchange, right? And of course, FTX will not be the last. There will be other exchanges, because all these things have happened in history so many times. And I think this is also, some exchanges you have never heard of, but it all happened before. And I think that's the interesting aspect. And I think it just reminds people to, exactly as you said, not your keys, not your coins. So, really read the fine print also where you send them, and many stories around those things.
Yes. Now, nevertheless, since then, exchanges have evolved so much, with Binance and BitGet, and the features that they offer, the copy trading, the fiat on ramps and off ramps and stuff. And listening to one of the sense that I got is how in a way now I'm not technically minded, right? I told you I'm a social worker, and I've been involved since 2017, but I can see how it's at the cutting edge of IT, and how a lot of the ideas that have come out of this space have gone into the legacy sector, but also how ideas from the legacy sector are now coming into the blockchain space and then being further developed. So, and then driving the bear markets and the bull markets. Now, you say that there are particular patterns to the bull markets. Do you want to go through what they are? So the first one, 2011, was when it started being used as a payment mechanism.
Yeah, that's correct.
And then what happened in 2013? And then what happened in 2017?
So in 2013, right, we had, as I was saying earlier, we had the European debt crisis. That was, of course, one component.
Yeah.
And it seemed a little bit kind of modest, from kind of 50 to like, $300. I mean, it's a 6x return, but then we came back into the summer, and there was, the debt crisis was resolved a little bit, and there was some, enforcement action. But I think the one thing I also discovered, it's not just the halving cycle that is really part of the pattern. It's really the regulator has also a big impact on these things. And regulator, I mean the authorities, the financial regulator, the government, basically. And also in 2013, we had the US Financial Crimes Enforcement Regulation that actually caused a lot of the crypto industry to move offshore from the US into other parts of the world. Because of this enforcement action, it became a lot more expensive for some of the on-ramp BitInstant. You maybe have never heard of it. I mean, the Winklevoss twins have apparently lost like $30 million, because of them. Back then was a lot of money. I think even for them. But because of these enforcement action, the business to transact and everything for those firms have become more expensive. So a lot of those firms actually moved overseas, or the business was scaled overseas. And at the same time, actually China really reinforcing it. As I was saying earlier, we had, for example, in May 2013, just after the European, debt crisis, ramp up of the Bitcoin price, we had CCTV coming out with a documentary and really reinforcing China, Bitcoin as the new money in China. And then, of course, a little bit later, we had like CZ, as I was saying earlier, CZ tweeting about it last week, but it was not really the linchpin really for the crypto rally. It was when Baidu, which is the Google of China, suddenly accepted Bitcoin for some of the online payments. And this is when the price really exploded and went up 8 to 9x basically. So it was really like a massive on-ramp in a matter of 2 months, really. It was really, a crazy bull market, which we have seen in crypto like so often. But it was really, this pattern of there's one regulator that is a little bit more negative about it, and then the liquidity just moves into like a different space. So, and I think that's also one of the lessons is no matter what the regulator in country A does, there will be another regulator in country B who is more liberal and opens up the market more. And then the industry will just, magically move into that space, into the liberal space, and really scale the industry there. And I think we have seen this in all the different bull markets. And it's very likely that we're going to see this right now with the US a little bit more harsher or more stricter, and other governments or other regulators, be it Abu Dhabi, be it Dubai, be it Hong Kong, or maybe be it Singapore, be more liberal towards it.
Right. Okay. I'm going to come back to the regulators in a bit. So the 2013, you said, was driven by what happened in Europe, the banking crash there, and also and I remember the Cyprus banking crash and how the interest in Bitcoin went through the roof, and also by China. In 2017 was the ICO. Everybody was launching an ICO. We had Markus Coin and Crypto Rich Coin. Well, we didn't really, right? But you could have done. And there were lots and lots of scams, lots and lots of shams, lots and lots of failures, and it drove and a lot of people came in to the sector, chasing wild, crazy returns. And just on that, I think in April 2017, I bought $30 worth of Verge, privacy crypto, XVG, $30. Bought me 250,000 Verge coins. Now, at one point, that 250,000 Verge coins in 2017 was worth over $90,000. So $30 to $90,000. I sold at $1,200. But those kind of crazy, insane returns were available and possible. So that drove the ICO craze. That drove the bull market in 2017, and also it happened a year after the halving in 2016. Anything you want to say about that one? Then we'll go into the 2021.
Yeah, I think what's also important to remember is, and I think some of the people who have read the book and came up with feedback, they're just like, oh yeah, we of course everybody knew about ICO, but how much money there was actually raised, and there were really like billions and billions were raised, and some of those billions were either kind of kept into like more stable things, so nobody, some people of course bought things that went to basically zero and they were all scams, but I think there was also some serious money that was raised that was for example moved into BTC or into ETH, and of course benefited when the bull market came back eventually. But also some money was sort of like cashed out a little bit to pay for operational expenses. And I think one thing that people don't realize is that Coinbase Institutional was also launched during this period, and because of that, there were some other companies like Celsius, BlockFi, and everything. Those companies were also launched on the back of, I guess, on the Coinbase institutional business that's being launched, because that will be feeding retail deposits into the institutional pocket. And I think this is where some of these seeds for the next bull market was really planted. And I think that's why we kind of had so much liquidity and so much money available, because it was really feeding from the retail to the institutional, and somewhere it got like a little bit lost in the mix. But that's like a little different story.
Yes, and some of the raises were outrageous. Was it EOS raised $1 billion? I think
actually EOS raised like 4 billion, and they raised it. But it's also like a very interesting story, right? And I think it's good to kind of be reminded of those stories and kind of just go through it. And I think what the book does, it usually compiles a lot of those stories and just puts them in one volume, basically, because the EOS race was over like 1 year, and actually there's some academic study being done, and it claims that around like 800 million of the 4 billion that was raised was all wash trading. So it was trying to just bring other people into the market and just increase the volume to just show there was more going on, and maybe there wasn't really so much going on. But it was interesting also because EOS kind of like claimed they're going to build, of course, the EOS system, and they're going to use $1 billion to kind of support the ecosystem. In the end, I think they only use like 200 million or less, and they put basically everything in BTC. And this is why they had actually 10 billion at the for the next bull market, instead of like going bust like a lot of other people.
Right. But as a project, I don't think that, from what I can tell, and it's impossible to follow all the different ecosystems and all the different projects. There's so many, but I don't hear a lot about EOS relative to how much they raised. It isn't a great success compared to some other projects that were launched on a shoestring and have done much, much better.
Yeah, I mean, I think EOS is again very interesting because it also shows the interconnectedness of the industry. Because there's one person within the EOS team, EOS of course is like part of Block One, but there's one person who's also part of the founding team of the Tether Foundation, or the Tether Limited stablecoin. And I think it's very interesting because some of those people, they tend to move around, drive the industry a little bit from behind the curtain, literally. And it's just really interesting. And I think the unfortunate thing with Block One, they raised a lot of capital. They didn't really develop the EOS blockchain and everything. And then they just started like another crypto exchange, which they call bullish, of course, but we haven't really heard too much about that. But it's interesting how the industry has evolved.
Yeah, and it sounds to me, am I right in assuming that your book, I haven't read it yet, but I'm getting increasingly interested, that it has lots and lots of these anecdotes. This is what happened with this one. This is what happened then.
Yeah, exactly. So it's really like one place where everything is compiled. I mean, and that's why, a lot of people say, they don't read books these days anymore. But, what are you going to do? I mean, you're going to like scroll on, I don't know, on Twitter, on Discord channels, and, on all these like Twitter or, crypto news sites. I mean, this is really where it's compiled, where it's, a lot of facts. I mean, I use 631 references. So the book is, quite heavily researched, but it really just, it nicely compiles it. And I kind of start to look at more like, as little like a book about World War II, right? If you're a soldier, you better know a little bit your history. And I think this is what this book really does, right? It just keeps you reminding, keeps you up on your toes. But I think at the same time, it also helps you a little bit understand what to kind of look out for the next bull market, right? And I think this kind of like helped me to call this market in Q1, because of some of the macro factors that are also driving crypto, because it's just not just these little projects or these little ICOs or something that really matter. It's really sometimes also like the the bigger picture.
Right. Okay. And we're going to come to what to look out for next. And I'm going to come back to you about the regulatory, and I'm going to come back to you about reading, right, as well. Yeah. But let's go on to, so then the next bull market in 2020, actually, what caused the 2017 one to collapse? The 2017.
Yeah. Interesting point. But again, we had of course, the futures listing in Chicago, the TradFi futures listing of Bitcoin and BTC, in basically December 2017. We also had, for example, Korea driving a lot of the bull market, and there was a lot of suddenly regulation was occurring and happening, where basically the SEC started to call some tokens securities, and of course this required more disclosure and pre-approval, which didn't happen, and I think that brought really the crypto bull market down in 2017.
Right. Okay. And then in 2021 was the next one. We had the halving in 2020. We also had the lockdowns begin in March 2020, and there was a dip in everything in March 2020. And then in 2021, it went up to, I think the highest was around 69,000, which wasn't, and the low was 3,200 in 2018. So in terms of the previous bull markets, it wasn't such a high multiple, because I think the pre-2017 low, if I remember correctly, was about $150, and then it went up to 20,000. And then the next one was 3,200 to 69,000, which actually was a bit disappointing because I wanted to do a whole lot better. But that one was driven, I think, if I remember correctly, by NFTs. Is that right?
Well, there were actually two episodes. There were two parts. So one, there was the yield farming, and
Yes,
the yield.
yes.
So we got the yield farming, we got kind of Tesla and MicroStrategy. So there was also a theme of treasuries, treasuries buying Bitcoin. It was a big theme of institutions going into Bitcoin. And then we had like a second leg in 2021, and the second leg was driven by NFTs, as you correctly said.
Right.
But there were
Yes.
multiple stories within that bull market.
Okay. Now I do remember the yield farming as it came across my screen or whatever. It's like all these food-based dexes. Pancake swap, which has done very well, but there were others. It was all to do with food. All of a sudden, I didn't quite understand. It took me a while before I got into yield farming. And for people who don't know, actually, do you want to say a little bit about what was it about the yield farming indexes and the DeFi space that drove people in?
Yeah, I think the interesting aspect is, and this is why I think this space really develops so quickly, is there's a lot of open source. So a lot of those projects can easily be copied, a little bit modified. And we saw actually really that all these dexes were really like copies of each other. And what they were offering is, of course, to attract volume and to attract TVL, to attract capital and deposits and everything. They were just giving out free tokens. And of course, here, the right strategy was to get the free token, but then quickly move on to a new project and quickly move around the money and not be stuck really. And I think that's what some of the smart people did, and this is why the trading strategy, for example, that Alameda Research had, moved very quickly from just trying to do some arbitrage to suddenly yield farming and just moving around quickly. And I think the problem is, of course, if you're left with something that goes down, pretty quickly and down to zero. And that was it's a little another story, but I think these dexes were really trying to attract a lot of capital, and it was just moving around and offering free tokens. And this is all what the yield farming was all about.
Yes, it was like chasing some ridiculous returns. And a lot of those projects, like with the ICOs, they folded. Okay, and then we had NFTs, digital tokens, which made no sense to me. But then, it made no sense to me when people used to collect baseball cards, or I don't know, maybe in Germany when you were a kid growing up, like the soccer cards in the bubblegum packets or whatever, right? Gert Muller and all those, right? So what was it about NFTs? Tell me in a nutshell, what happened with the NFTs and how they drove the price rise.
Well, of course, in hindsight, NFTs went down a lot in price too. There was like a big hype. There was a big story how it would be kind of like a status symbol, like having basically a Ferrari, but having the NFTs the same, because you can show people you were early. There's some track record, some history. But one thing actually I discovered is there was, of course, this gentleman that bought the people $69 million dollars, the 5,000 every days NFT. And it turned actually out that this person who bought this NFT, he bought actually 20 other NFTs from the artist people, and it was really just helping to mark those NFTs to a higher valuation. But it also turned out that people himself had like a small stake in that company or that fund that owned all these NFTs. So there was like a mutual interest really to just drive up the price, and it was all kind of correlated. They were all in bed together. They even issued a new token itself about these NFTs and tried to drive up the price there too. But this guy actually, he did a lot of interesting things because he started an exchange years earlier. Then he moved on to launch a Bitcoin ATM in Canada. And then he moved, then he did an ICO even. And then he moved on to these NFTs. So this actually is a guy, respect to this person. He moved on the whole industry from, to whatever was hot in the industry. So he really was able to really, position himself quite early with these things. There was, of course, also questions about, was this all with, in a legal sense, because there was a complaint filed in Canada. Again, because of his ICO that he raised, there was some disappearance of some ETH. Anybody could use that ETH to buy these ETFs, these NFTs, and really build it up. So it's quite interesting. But it shows how connected everything was. But it was really the NFTs where a lot of people thought this is gonna have some status symbols. And of course, we had also some established people like Mark Cuban trying to push it. The NBA Top Shots, but of course those things also went down a lot. So I think people need to be kind of really careful. But again, it really the book really shows people also how you can, make money, but you can also lose a lot of money. And it's really just, need to be really at your forefront. And, you gave those warning signals a little bit earlier, but I think it's always good to remind people. And that's why I think there's some value here.
Yes, yes. And I actually have a disclaimer. You won't have seen it unless you've watched my videos, Marcus. And if you hadn't, you should subscribe, comment, like, and all that business.
Yeah.
But I always have a disclaimer in all my videos. And it's really, really simple. Do not invest any more than you can afford to lose. And that's true of Bitcoin, altcoins, gold, silver, any other asset. Do not sell your house, wife, children, underpants in order to put it all into any particular investment. Okay. And then what's going to come next? Is it going to be AI? Or is there going to be some surprise? What's going to drive the next bull market? Because I'm ready. Not that I'll necessarily buy into the fad, but I'll benefit.
Yeah, I mean, the way how I look at it a little bit, that, for example, if you would have bought Apple shares like 20 years ago, you would have had no idea, about the iPhone, all these apps that we're using every day. And you would have just, you would have really just like no idea, right? And I think with crypto is a little bit, we're having these, the last kind of like 2 years around like $60 billion of venture capital money went into crypto firms and startups. A lot of, the smartest minds from universities are working on it. We know, of course, a lot of people from MIT and Stanford, Stanford moved into crypto. So I think we just have to like assume something like good comes out of it. And I think the other kind of, I think, lesson I kind of like took away over the last few years is, 10 years ago, we weren't really streaming a lot. It cost a lot of money to download things. It was slow. It didn't really work. But then suddenly there was a switch, right? So suddenly like people were using Netflix, streaming, even like, this Zoom call, for example, didn't really work. And the key thing was really that, of course, the cost went lower. And I think that was really the key thing. And I think with all these upgrades that we're having with Ethereum, it's really trying to make the transaction fee really, minuscule, really just, almost like irrelevant. A little bit, still that you cannot really do spam without really being penalized, right? Because I think that's what crypto tries to do a little bit, having some fee, so spamming is not free. But, with all these upgrades, and I think there will be another upgrade coming end of the year, then the cost will be a lot lower. And I think then maybe a lot of applications are maybe more viable. And I think that is kind of the key thing to look out for.
Right. And you're talking in particular about Ethereum and the upgrade to Ethereum later this year. And that's interesting you say that, because I've done a lot of videos on the Cosmos ecosystem. I've used Polygon and the Binance Smart Chain and stuff, and I use Ethereum. And as I'm talking to you, recording this, for the third time, I've got a transaction that's stuck on the Ethereum blockchain for more than 24 hours. And it's going to cost me more gas to release that transaction. And all I was doing was sending some ETH from one address to another address. And I'm like, and I'm someone who's experiencing crypto, I got to deal with this. We're not going to have widespread adoption. Meanwhile, I've never had that sort of issue with the Cosmos ecosystem, with any of the assets there. Transactions really, really fast. And there are other ecosystems that offer the same finality. So I'm a little bit puzzled by why you think Ethereum, when it's so clunky and there are these other protocols that are faster, way more efficient. So what is it about Ethereum?
Well, I think it's probably, the decentralization of it, and, how widespread, how it's used, how, a lot of other, other protocols using it, and, it's used for a lot of NFTs and everything, and it's really established, right? So, but again, I mean, I share a little bit I get your frustration. I think these upgrades have been like far too slow. I think they have been far too careful. They have not really taken a lot of risk, and I think they're becoming, maybe aggressive is not the right term, but I think they're becoming, a lot less aggressive to really kind of really build this in industry and infrastructure for it. And I wouldn't be surprised if there's a new chain suddenly coming out and people like jumping on it because it solves a lot of those problems. But I think the issue that we need to solve really is what are really the use cases, and I think that's something for the next bull market. That's probably going to come, and then it solves a little bit that we're using it more for cutting out more middlemen. I think the history of technology is really to cut out more and more the middleman, and I think here the middleman that Bitcoin is or I think crypto is trying to, of course, take out is a lot of the the middle office and back office operations for a lot of institutions and everything. And I think, NFTs, I think NFT is a little bit easier to explain because, your airline ticket can be an NFT, right? Why is there like a booking fee? I should just be able to sell it to someone else. And for the airline, it doesn't make any money, right? I mean, people are always like more frustrated when they need to rebook a ticket instead of like, I sell it to you and then it's done. And then you go with this NFT ticket to, to, I don't know, the concert or whatever it is. So I think that's kind of like what's maybe coming, and a lot of people like working on it. But I think we're seeing this more and more, right? Because again, I think concert ticket is an easy sell. Airline tickets is an easy sell. And unfortunately, I think we kind of like missed a little bit the opportunity because with all these vaccine certificates, that could have been like an NFT as well, right? Instead of like you staying at immigration, oh, where's my paper, that I'm like vaccinated or something. And I think if everybody would have had an NFT that's kind of like widely accepted and available, then people getting used to it, right? Or people would have gotten used to it, and then they could have, gotten used to maybe another form of NFT. I mean, that was really something I think they should have really just kind of, accepted it and driven it, and it would have made everything a lot more easier to handle. Being driver's license, on the blockchain, be it certificates and education and everything. I think this just could have been, really, help really the population getting really used to it. And I think that's really key. That's what we need to kind of get to.
Okay. But it's interesting you say that, because that brings us into, and I was going to bring this up and a related subject, which about CBDCs. So I was wary of that. I am wary of that. And there's a conflict between centralization and decentralization. So cryptocurrencies represent increasing decentralization, peer-to-peer transactions, and of course the government and the rentiers in the middle, they're going to want to take their cut. And that brings us into regulations. What's on the horizon? The EU will want to bring in more regulations. A friend of mine was doing a transaction with a payment on-ramp, off-ramp in the UK, and was told that he had to account for where he got this Bitcoin from. And he purchased it in 2017. He said, I don't know, I haven't got records. And they said, well, we're not going to do the conversion unless you can tell us. So what's on the horizon with regards to regulation, and how do you see the struggle between decentralization and centralization working out?
Well, I think the history shows very clearly if one regulator is closing the door a little bit, then the industry just moves to like a different place, right? And because everything is so global, we also have like more kind of like these digital passports now, where you basically can work in Palau, based on this, with this digital identity, but be registered somewhere else. And I think, we have seen already the Middle East, and, I think Europe. I mean, one of the kind of my secret favorite is actually London, because, London is, of course, has a lot of infrastructure, large ecosystem of venture capital. And of course, I think the key thing is it's really kind of the center for TradFi money. So you don't have to be in London, but I think London with a regulator, with a large clearer, and I think we're going like more and more that some of those crypto, let's say, exchanges that are offering everything from OTC trading to clearing to trade matching to being your prime broker and everything else, that those kind of being more siloed in the future. And I think this is what we are seeing in TradFi, of course, where all these are different entities and overseen by the regulator. And I think in London, this could very well be because, London has already, established TradFi firms, and we have, of course, heard from some of these TradFi firms like Fidelity that want to be more in the industry. They have been in the crypto industry. They have built, or they are building, some of those I guess regulated crypto ventures. But nevertheless, as I was saying earlier, that the Middle East has really, is really opening the level playing field there, and also offering, a sizable piece of cheese for the crypto people, right? With $2 billion that Abu Dhabi is like willing to invest in Web3 companies. But of course, they want them ideally to be based, within their own borders to help really build the industry there. So I think we have, various forms also in Hong Kong. Hong Kong is the first step. And various people have claimed that Hong Kong is just kind of like the guinea pig for China, for the opening for crypto. I mean, if that happens, then I think, the industry will once again be scaled in Asia, which is what happened over the last few years.
Right. Okay. And then what about the threat of CBDCs? Because the way I see it, they're not going to want, the European government that are developing it. The British government is consulting on it. the other jurisdictions that are building and developing, they're not going to, if there was a CBDC in the UK, I don't imagine the British government are going to want people to be able to use Bitcoin as well.
Well, again, I think it's, the blockchain technology, it's really that's the backbone of this, right? And the idea, of course, of a government digital currency is you can program it, and you force people, of course, to spend it up until a certain day. You can track the movement. It's not what people necessarily want, I would assume, but I think all the governments appear to be working on it. So I think it's just a matter of time, when we get it. But I think there's no doubt that we're going to get it, and I think it's probably going to be there are going to be some incentives for people to kind of get used to it, right? Maybe there's going to be some free money, some COVID stimulus type money that people get, and suddenly, oh, it's not that bad, and people getting used to it. But there's no doubt that it's coming. I think every government is working on it, and it's just kind of like a natural progression of the industry and natural progression of the government.
Okay, but wouldn't that destroy decentralized cryptocurrencies?
Well, I think they can be in parallel, right? So I mean, we also have 5, 6, 7 larger currencies. So why can't the governments also have their currency? There's of course the larger stable coins that are a little bit more. I mean, even like Tether is also centralized, right? But centralized in its own way with this entity. I think the question is how these cryptocurrencies going to be converted and overlap, basically.
Right. And then my suspicion is that the CBDCs will not be transferable within crypto, because it is a closed system. The governments, they want to be able to exert control over every single thing, as you highlighted earlier. But I think what's likely to happen is you'll have the CBDC system, and then you'll have an informal economy, which will, I think, largely be driven by, will contain a large portion by the privacy cryptos like Pirate Chain and Monero and concealed network and stuff.
Yeah.
Yep. So do you want to say something about how you see the role of privacy cryptos?
Yeah, I mean, we just, we have to just monitor, of course, how the government reinforces this, right? We have, of course, we saw last year how one of the developers of Tornado was arrested. He was released, and we have to see what comes out of this. The whole code is law or not, right? I mean, this is the debate that needs to be cleared a little bit. But we also have, seen, for example, some established, crypto people like, Vitalik himself, saying he has used Tornado as, just to kind of, I guess, untraceable money to donate it for some reason. So I think we just have to see. But I think the industry has been so far developed. There are 420 million people in the world using cryptocurrencies, be it for trading, be it for remittances, be it for all kinds of things. And it's very difficult to see how this is just going to die down. And I think there will always be some part of the crypto universe that are using those kind of parts. But I think it really depends, because everything is traceable, and there's been a lot more work done on classifying what is going through those kind of dark sides or mixers or something like that.
Right. And I think that historically, great technology, improvements in technology have always beaten out old technology, and that decentralized improved technology has always won over centralized technology. And an example might be what happened in Afghanistan with the occupation by the Soviet Union, and then again by the United States. With the Soviet Union and the United States, with their weaponry power centralized, couldn't defeat farmers with Kalashnikov rifles. And the Kalashnikov rifle is incredibly decentralized, because it's easy to copy, easy to make the bullets, easy to pass around. And it just becomes too expensive for the centralizing power to try and maintain control over a decentralized, improved technology. Okay, now we've covered CBDCs, we've talked about regulation. Was there anything else? Talked about privacy cryptos.
Yeah, no, I think crypto we covered a lot, right? And a lot, is in the book. A lot of the stories, right? Some of the hacks. As we know, there has been also multi-million dollars, hundreds of $1 million have been hacked. more money has been lost in various forms, and it covers the story about Binance. It covers the story about FTX and everything. As I was saying earlier, a lot of people want the audiobook. I mean, there's a lot of detail in it, so it's good to have the book in front of you. A lot of people have asked, so working on it, we're going to release it at one point. But I think it's also like a reference guide, so it's actually good to kind of have, right? If again something like CCTV talks about China and crypto, you can easily like go on, let's say, page 62 and read like 4 or 5 pages, and you're like up to speed what happened the last time and everything. So it's also like a good reference, to have, and it's just interesting how far the industry has moved over just like a few years. I mean, even like 4 years ago, there was, this whole kind of like yield farming trades was starting. As you said, a lot of the kitchen stuff, there's, the food stuff, the sushi swap and everything, was just starting. Stable coins wasn't really anywhere. And Binance was actually relatively small. I mean, Binance, really came also like very quickly and a long way. And, the book also talks about how Binance really grows so quickly, and, and where they have maybe cut some corners, along the way and everything. So.
Okay, that's very good. Thank you for reminding me the whole thing about reading, because I said to you before we started recording, is I stopped reading ages ago. And why I stopped reading is because there's so much information on the internet. I can convert it to an MP3 usually and listen to it at high speed while I'm cycling along or doing the washing up and stuff. And because I can listen to it at high speed, I can take in more information in a short amount of time. However, there's nothing like getting lost in a good book. Nothing like, I remember one of my favorite books is a non-fiction book, David Remnick's biography of Muhammad Ali, King of the World. And when it came out, I remember walking down the street reading the book. I couldn't put it down. Such a great book, such a great book. And there's something that happens. I think the experience of reading and getting lost in reading is very distinct from listening to an audiobook or yes, even at high speed and stuff. So there is something to be said about the book. I do like what you said about the book. I am interested. It's available in Kindle and hardback. When will the paperback be out?
The paperback is out already. I just released all 3 versions, so hard copy, paperback, and Kindle. So it's available on Amazon and Google Play and in various forms.
Okay, and do you have your own website that people can buy it off you direct?
I have my own website, but I don't really like distribute it. I have sent some copies around because some people were really kind of insisting they want a signed copy and everything. It's a little bit cumbersome, but I have my own website. It's my name, Markus Thielen .com. But ideally, people go to like the normal forms of ordering on Amazon, which works very well. They have all 3 versions available, and it goes pretty well.
Okay, well, I'm going to get myself a paperback copy. I have a holiday coming up, and I intend to lie in the sun and top up my vitamin D levels and reading about that, because it sounds fascinating. I love that, because I don't know if it's just me, but people just love anecdotes because it's like gossip, and what we've got here is blockchain gossip.
Yeah, and you don't have it anywhere else. You don't have any. It's just really the only book that really covers everything. Covers the whole industry. The people, the characters, the firms, right? Firms you maybe have never heard of, but I think they have really made a big difference in the industry. And some numbers, of course, like staggering. I mean, the numbers really have gone up a lot of some of these crypto people. So.
Right. Okay. Now, is there anything I want to know? Are there any particular projects that or cryptocurrencies that you're keeping your eye on that you're willing to tell us?
Well, we invest a lot in crypto, so I'm keeping my eye on, the large ones. I'm a big fan of the large ones. I really mean kind of the top kind of like 50 right now, the top 20. In a bear market, I think you're just trying to stick with quality, but also you're trying to see where the volume is, what's happening, what's happening with ordinals, what's happening with NFTs, if anything comes out of there. But yeah, I mean, I publish a lot also on my own LinkedIn page. Quite active. Of course, we have an institutional research product for institutional crypto investors, but I'm very vocal on kind of social media, and again, I think this book is really for me just giving back to the industry, to people to just have the information themselves, and it's just really sharing information.
Right. Markus, listen, thank you so much. Really appreciate it. Is there anything else you want to say before we finish up?
Well, get the book, read it yourself, and I'm sure people are, really happy, reading it. So I have a lot of people already, the book only came out like something like 2 weeks ago. A lot of people already read it, who just read it like, immediately within a few days and, couldn't put it down. So I think the feedback has been very good so far. So I'm, very pleased on that sense.
Great. Well, listen, thank you so much for reaching out, and thank you for writing the book, and thank you for having this conversation with me. Now, if you're watching, I'll have the links in the description below: his Twitter, LinkedIn, his website, also a link to Amazon, but you can look elsewhere, and let us know what you think about what we've talked about and about the drivers for the price rises and stuff, and what do you think is going to be driving it next. And Markus, thank you again. And between now and when I see you next, please keep filling your library with crypto profits. This is Crypto Rich and Crypto Markus signing out. All the best. Bye-bye.